Yeah, we're seeing actually across the group some significant headwinds, both in terms of steel and plastics and chemicals in general, and in combination with some pretty significant currency headwinds, mainly in our Latin America business and in Europe. And these are ongoing headwinds that we're facing and addressing throughout the year.
And there's not much you can do about them short of getting Donald Trump to lift those tariffs on steel, for instance. But the market for your products in North America, by your own admission, is softening. Do you think consumers will stick with you in markets like North America, given that you will be passing on these price increases to them to protect your margins?
Well, I think the overall consumer demand backdrop is quite supportive, really across the world, and for sure in North America. So I think the consumers are quite resilient. But of course, the higher input costs that we're facing in our industry is being passed on to higher consumer prices, and there is some demand elasticity related to that, which we've guided for. But we see the overall backdrop on consumer demand as quite favorable still.
You've got 6 major business areas, sir. In your annual report for last year, you said that half of those were now in what you call the target growth phase. As you look for profit growth, where are you now in terms of those 6 business areas?
Yeah, that's still very much the case. Particularly our European business is growing profitably. Our professional business and also our Asian business. Those 3 divisions are very much in our profitable growth mode. We also saw nice growth actually in Latin America, despite the significant headwinds that we're facing there. So we're extremely pleased with the products that we have in the market right now. We see market share gains across the world. So as we're facing these headwinds that we discussed, we're doing that out of a position of strength.
We're just looking at your share price there. It's down almost 30% on the year. Why do you think investors are not buying into this strategy for profitability growth?
Well, I don't necessarily think they're not buying into it. I think the share price is very much a reflection of these headwinds that we're facing, and people are waiting to see to what extent and how quickly we can offset that. And that's, of course, our focus going forward.
You got stung in France recently after a recent court decision cost you 25 million euros in provisions this past quarter. You've had to set aside twice that amount to deal with allegations of price fixing by the French Competition Authority. Both of these obviously eating into profitability. Should investors be aware of anything else in the cupboard that perhaps has not yet come to public light in terms of various territories in which you operate? Obviously, there's dozens of them around the world.
Yeah, no, there's nothing that we haven't disclosed publicly of any magnitude.
What's the element of the last 3 months that's made you as CEO most happy with your company's performance then?
Well, it's really the success of the new and innovative products that we've launched under our core brands, Electrolux, Frigidaire, AEG. We're gaining market share profitably against these tough cost backdrops, and I think that's extremely pleasing. We're continuing to drive cost efficiency. We have a long and strong track record on that, and we're continuing that work.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.